Before the opening bell, a strong U.S. dollar and tough competition for some popular drugs added up to a tough pill to swallow for Johnson & Johnson last quarter as it missed Wall Street's revenue forecasts. J&J was the biggest decliner inside the Dow today, falling more than 2.5%. So what happened and what's ahead this year for the health giant? Meg Terrell has our story tonight.
For the world's biggest healthcare company, the fourth quarter was just okay. Growth continued in Johnson & Johnson's pharmaceuticals business, driven by a new drug for hepatitis C. The company's medical devices and consumer products units continued to struggle. But it was J&J's forecast for 2015 that caused the stock to plunge today, primarily due to a stronger U.S. dollar.
As the dollar gets stronger versus these overseas currencies, it means that the profits that multinational companies are generating outside the U.S. are being brought back at basically lower rates. Whether it's the euro, the yen, or some of the emerging market currencies like Russia, there's been a meaningful change in rates over the last 6 months. And so if you're a U.S. company selling products outside the U.S., you're going to get hit when that happens.
J.P. Morgan analyst Mike Weinstein warns the strong dollar means we're likely to see more disappointing 2015 forecasts from other large multinational companies. As for J&J, the tough 2015 also comes from increased competition to some of its key drugs, including hepatitis C medicine Olysio. Weinstein's looking to a recovery in the medical device and consumer products businesses to offset any slowdown in pharma growth. The health giant is still coming back from a series of recalls that took popular over-the-counter medicines like Tylenol and Sudafed off pharmacy shelves. And with more than $14 billion in cash, J&J could be a big acquirer of both consumer brands and biopharma products, according to Weinstein.
I think they should continue to do deals in pharma and biotech. Their track record there has been exceptional. So they've done a great job of using their balance sheet there. And I think after that, I think there is opportunity for them to reinvigorate their consumer business with acquisitions. And that can be established brands in the U.S. It also can mean increased emerging market exposure and opportunity.
So the world's biggest healthcare company could get even bigger. For Nightly Business Report, I'm Meg Terrell.